R.E. McMaster Jr. has been with us on several future occasions. It's always great to have him back and bring us up to date on what's going on in the global financial markets. In addition to the other things he does, he's written a shelf full of books, enough for you to read from now for the next week or two. And they're all good, and he does tremendous research into the area of economics, how the Christian ethic works, and what may be happening in the future. Welcome, R.E. McMaster Jr. this morning. It's a pleasure to have him here, please.
It's fun to be here when, on the same morning that David Adair and Bob Beck speak. This is the, I guess the 10th year that I've been here off and on since '87 with Global Science. I want to talk to you a little bit about a few things that I do back in the table because I've had a lot of questions. I'm going to take about 5 minutes on that, and then I'm going to get into money. And rather than take the safe approach in my discussion this morning, I'm going to take the high-risk road. Is that okay with everybody? All right. Earlier this week, Monday, Tuesday, and Wednesday, I had my annual physicals taken in Nevada. Dr. Fuller Royal, MD, and homeopath, Nevada Clinic for Preventive Medicine, and also Dr. Tim Francis at Tri Chiropractic. They're on Jones Avenue in Las Vegas, Nevada. They do them every year, and after they run the batteries of tests, they don't associate with each other at all. I have them look at the profile, and I say, okay, of all the thousands of patients that you see and know, what is my age? Effectively, what is my age? And Tim Francis says, well, your oldest system is 40, and that's the parasympathetic side of your autonomic nervous system. Fuller Royal, who is considerably older than Tim Francis, says you have the profile of a 35-year-old man. Next month, I turn 50. So obviously, there's something I'm doing right. I went through a due diligence to look at Electromagnetic Center for Curing Cancer in the Dominican Republic last December. Was going to establish one in the Bahamas. They ran me through the electromagnetic, went over with all the MDs over me with the ionizers. They said I was the only man that ever went through their clinic that had no negative cell readings. And also with a live cell microscopic blood analysis, one of the analysis was, the guy asked me if it was over, he said, have you been a vegetarian for 15 years and do you run marathons? And I've had a lot of people ask me, what I attribute that to. And it's a combination, frankly, of spiritual, mental, emotional, and physical integration. I've talked about this for years. It saved my son's life. It's a product called Earth Manna. It's grounding. Jensen said life begins in the colon. Well, this is the stuff that did it. I can't talk about everything that it did, but I know those are the results I can talk about personally. It's now in multi-level marketing form by the way of Nature's Biotics, but I will beat both the bottle price and also the case wholesale price. Anyone that doesn't want to get an MF in the multi-level marketing, just have it. I have some information on that back at the booth. Secondly, the book that took me 17 years to write called The Christ Within. When Nanette spoke at Global Science in January at Tampa, she talked about Dr. George Merkel's work, who has something like 465 patents in every kind of science you can imagine. And after it was over, I went up and showed her the design that I basically designed in terms of the cover of this book. And I said, have you ever seen this before? She said, oh yes, that's the nuclear well. That's the point of new beginnings, where basically sacred energy or divine energy comes into the cosmos at the point of new beginnings. So you've even got the counterclockwise right in the 8 points of division. She said, where did you get that? I said, I got it from all the holographics of all the other things that I do in terms of time, space here on Earth. And it turns out to be the oldest, one of the basic building blocks in the blood, as well as one of the oldest graphic depictions in the Sumerian literature. I have a few of these left at the back table as well, along with the Power of Total Perspective, which is kind of the companion manual to both of these books. And interesting enough, both of them ended up being exactly 1,000 pages, and I had nothing to do with it. It just turned out that way. Final thing I want to mention is that I've gone all the way from my first book, which was Cycles of War, to my 11th book, which is a book of poetry. So this is called A Highlander's Passion. And if you've got some men that don't understand what the women's psyche is all about and how to think, and it's okay to be sensitive as a man, buy it for them. The book has really had some great reviews. All the reviews, by the way, on all these books are back on the table. And all these books have been discounted for this conference by at least a third. So it's available to you. You know, it's said that poetry is the filter through which the truth of life is distilled, or poetry is the prism through which the essence of life is refracted. Well, I started writing this April 2 years ago, and it's all right brain stuff. As much of the analysis that I do left brain, the poetry is totally right brain. It comes, and it's there, and it's done in 15 or 20 minutes, and I don't plan it, I don't think about it, it's just there. So you can go all the way from that to the analysis of the Reaper, which I have some samples back there that are free. This has to do with the currency crisis, and I also brought you another one called Stock Market Socialism and the New World Order. I thought some of you might be interested in that one. And then these are free back there as well. It's an explanation of, has some inserts about all of what I do. Table's right across from Jan, just across from the second exit back there on that wall. Okay. Let me give you where I come from, because you know, anytime we have thoughts, we're dealing with a model, a philosophical model. And here's the perspective that I work from. I define, can we get some light? Thank you. I define spirit as conscious living energy with personality, power, and purpose. As it comes down through the nuclear well, divine energy into energy or frequency. Of course, energy and frequency and matter are interchangeable. Matter is established by an electromagnetic field of energy. When matter takes on consciousness, we have life. And then you come down to money, which is nothing more than stored life, stored time, stored energy. Look at money that way. Money exists within time at the bottom, and this is where the society is functioning right now, primarily in terms of its primary direction, as opposed to spirit. I know I've got a pretty good frame of reference just having come from Las Vegas and the Mirage and gambling, the International Mining Conference. It took me a day to shift. So I'm going to talk a little bit about what's going on in terms of money in a metaphysical sense and also in terms of an investment sense, and hopefully put together a holographic picture that'll make sense for you. Maybe I'll move, in fact, I think I'll move these over here so it'll save some time. Here's a model. While it's not perfect, it's useful. David Adair in the last hour talked about why we have a great future ahead of us. That's possible with qualification. We have tremendous technology today, but we've got a money system basically. We have $20 trillion in debt in this economy that's compounding, and I'll show you if I have time later this morning a function of compound interest. While we're heavily indebted, power is shifted to the east. I've talked about this in my newsletter back in 1980, how China would be the next great civilization at the end of the 510-year civilization cycle. Well, in 1980, who would have believed that? But now, clearly, the work ethic is in China, the economic growth is in China. In the Far East, the emphasis is upon family. The gold has gone to China, and whoever has the gold makes the rules. That's the golden rule of reality in this world. I mean, the spiritual golden rule is do unto others, you'd have them do unto you. The monetary golden rule is whoever has the gold makes the rules. So there you go. But anyway, in terms of what David talked about by way of technology having tremendous benefit, it's like the technology is a neutral factor. It's like the computer. The computer can lead to incredible individual empowerment because it provides information and therefore better decisions and therefore more dissemination of power and equality. Or a computer can be used to track, as the NSA does, you know, with over 26 files on every individual, and control everything. All right? And that's good, and basically comes down to one of the two ways that we organize society. And this has to do with the way money's organized as well. And the way I divide this out is the old question in terms of your philosophy classes, you'll remember, is that how do we balance out the rights of the individual and the group, or the one and the many? And it has to do with the vector versus a circle, the individual or the group and the collective, the many and the one, the yang, the yin, the light, dark, kinetic, potential, justice or law and mercy, masculine and feminine, parts and whole, time and space with vectors or with eternity. Now the truth is, as individuals, and I think it's important because we're going to enjoy this great technology and medical advancements that we have, we've got to get back to some basics in terms of how we function in terms of individuals and collective. All of us are individuals in a sense, so all of us are masculine. And even in terms of the way we are personally, Men have to do good to feel good. Women have to feel good to do good. Men have a masculine primary signal. Women have a feminine primary signal. Men have an external masculine core that becomes feminine as they go from testosterone to estrogen. Women have a feminine exterior that becomes masculine as they go from estrogen to progesterone. So we're all individuals and we all have the male and female in us. The point is, all of us want to live over here in the one where there's love and light and eternity and all the rest of it. But there's one kick. There's one kick here. And that is, on Earth, we have to deal with this thing called the second law of thermodynamics, or entropy, or the spiral down. Everything moves toward decay. And so, if you look at societies that are successful, whether it's economically, politically, and they're going to make progress with the 6-1 impulse, which is why you need a day off, because you're going to have that 6-1-6-1 quantum impulse. You must start with a masculine impulse, and as it moves from ZPE, or zero-point energy, comes out, and each of us is individually, through covenants with family and friends, through contracts with the outside world, voluntarily create the whole, as opposed to the chaos that results from assuming the one on Earth due to the second law of thermodynamics, which then out of chaos comes bureaucracy, tyranny, rule from the top down. This creates joy, peace, prosperity, justice, love, all the wonderful things all of us want. So in a sense, there's equity between the feminine and the masculine, but the masculine leads the feminine, grounds, activates, catalyzes. The reason a Hertzian carrier wave is masculine, it provides the ground for a non-Hertzian feminine scalar wave. Or electricity, you have to move the rod, the copper rod, through the spiral before you get electricity. Or in sex, well, guess where the activating principle is? It begins in the male. Or ZPE, beginning at ZPE, light accelerates, masculine vectors moving out, curving back on in itself, passing the Einsteinian bridge, curving back in quantum, becoming feminine and creating the whole. Or Eve coming out of Adam is another way of looking at that. It's both. But the whole point is that until we get back to government being primarily self-government, each individual being accountable, responsible, working with responsibility, humility, duty, and empathy with regard to our fellow man, and covenanting and contracting, voluntarily creating as masculine or individuals a feminine collective whole, what we risk with all this high-tech stuff is what C.S. Lewis called that hideous strength. Out of chaos comes high-tech being used bureaucratically from the top down. Now, our money system is directly related to this. It's directly related to this. What's going on presently in the world is an international currency crisis, except for the U.S. dollar. And the U.S. dollar has $20 trillion worth of debt. One of the root meanings of the word debt is death. Mortgage comes from the French word mort, like mortuary. Okay? The gold is being shifted to the Far East. Presently, there is a tremendous currency crisis going on in the Far East. It started in Thailand, and what happened, there was a huge real estate boom there, and the banks loaned too much money for real estate, and then real estate crashed. The banks became impaired and became questionable. After that happened, the stock market crashed, bank stocks went down, and presently the Thailand government's looking for a $12 to $20 billion bailout from the International Monetary Fund. As a result of the dominoes all being related in the Far East, not only did the Thailand baht, which is their currency, crash when the central bank could no longer defend it, Malaysian ringgit crashed, Singapore dollar, Australian dollar, New Zealand dollar, all the currencies in the Far East crashed. Now, interest rates in some cases have gone to above 20%. Those countries, China, Japan, and to a certain lesser extent the European central banks, are the primary holders of U.S. Treasury debt. I would suspect that we will see in the not too distant future, meaning between now and 2008, 2012, the Far East go on its own gold standard. The other thing that's happening in terms of international currencies is taking place in Europe, where the European Monetary Union is trying to create this one currency called the euro. The euro. and they have to meet budget requirements of 3% of GDP and all of these things, and it's not going very well. As a result, what is happening is that the European currencies are in this chaos, as the Far East is in chaos. These are the two largest holders of U.S. Treasury debt, if you will. And that's going to be resolved here within the next year, just as the Far East currency crisis is going to be resolved in the next year. So what has happened is a unique situation here in monetary and economic history where we have Europe in chaos thanks to the European Monetary Union and the Euro. We have the Far East in chaos, monetary currency chaos, thanks to all the dominoes effects spilling over from Thailand, even into Singapore, which has effectively gold enough to back its currency. And so what currency is left to go into? The U.S. dollar. The U.S. dollar has been where the money has flowed. Not only because the economy's been healthy, because unlike Europe, the U.S. economy built a service economy based was labor intensive rather than the European model, which was industrialized or machine intensive. So this U.S. dollar right now has relatively high interest rates, a healthy economy, and of course that means that money can flow into U.S. Treasury debt, hold interest rates down, in turn keep the stock market boosted, and also the Treasury bond market going up. As Treasury bond prices go up, interest rates go down, okay? Now here's a question. Here's a question. If we have maybe as much as 65% of our Treasury debt being held internationally by not friendly for us long-term militarily in terms of China and Japan, which is now starting to come out of recession. The Japanese yen on Friday made a huge 3.5-point jump against the dollar. We were long. I went long this last week because my indications were that Japan had basically is bottomed out in its recession and that they're going to have to raise interest rates pretty quick. What's going to happen when the euro gets established or doesn't get established and they move back to some type of stability in Europe out of chaos? What's going to happen in the Far East when that currency crisis stabilizes and those economies pick up or go their own way? Then who's going to buy all those U.S. dollars that are being rolled over? Who's going to buy all those U.S. dollars? They'll have to be monetized by the central banks, if at all, which means that's inflationary. Because right now they're very much concerned about a deflationary force in the global economy. That's why we haven't had inflation other than asset inflation in the stock market. The risk that we face is what's known technically as a disintermediation or a movement out of U.S. dollars back into these currencies. When that happens, the dollar moves down in price, bonds move down, interest rates move up, and the stock market rolls over. And we're in a mania right now anyway. We're at the end of a 510-year civilization cycle. We're in the middle of a 179-year solar retrograde cycle. We're at the trough of the 11-year sunspot cycle. All of these factors have provided us with kind of an illusionary ride. It's like running off the edge of a cliff and the momentum's still carrying you up before the fall comes, and that's where we are. In April, I had the opportunity to be in Luxembourg, where some of the, half a dozen of the top money managers of the world meet every year. They handle like $24 billion. And their concern long-term was that we would move back toward inflation once this deflationary factor became evident in the central banks. And their concern also was that earth changes, particularly in Japan, would send shockwaves to the international monetary and financial community. So while the American general public is complacent at this time, between now and probably the end of this year, and for sure in 1998, I would expect to see a significant sea change, a significant shift by way of asset relocation and rethinking of present economic monetary reality. My cycles for gold and silver, for example, are showing signs that they should bottom no later than the end of first quarter next year. The dates that I have programmed so far as potential, and I'm like, it's like the weather, the closer you get to it, the better you can pinpoint it, are August 27th, 28th, the first time frame, then the mid-November time frame, mid-December. And ironically, I just got Larry Akers' newsletter in this week, and came to me here while I was at the hotel at this conference, and his projection also is for 1998 to have all this stuff turning around. So we're in the middle of a time of shifting. Now, I brought a lot of transparencies with me. that I want to share some of this stuff with you. I promised to talk about some of the effects historically of solar influences. If I can get the lights up here again, please. Can we get this one? The effect of this shows the effect of sunspots on U.S. industrial production from 1875 all the way up into this chart was completed in the 1930s. You can see there's a correlation between what's going on by way of solar activity. And a long time ago, I'd say about 10, 12 years ago, I started following the National Oceanic and Atmospheric Administration data out of Boulder, which basically documents all the sunspot activity, because I found that often changes in the geomagnetic field, sunspot solar flares, earthquake activity dovetail with my market turning points. I said, I wonder if this is just a coincidence or if there's a cause and effect relationship. And sure enough, as you can see, historically there is. Here's another indication depicting much of the same thing. The second chart from the top, second line from the top shows the sunspots and linking in with manufacturing, solar activity, crops. Of course, we know that the El Nino is a factor in the markets presently. Now here's an interesting one. This is 1929 in the stock market. Solar radiation and New York stock prices. How's that for a correlation? Also with London stock prices. Pretty amazing. And there's just other indications. Ultraviolet solar radiation tied to business activity. Sunspots linked to actual physical production. Effects of volcanic dust on solar radiation. See, economics is basically comprised of two parts of the equation, land and labor. That's all there is. People and things. And what affects the land side of the equation, climate and weather, affects the labor side or the economic side. The problem is, because we're a world city-based economy now globally, all the emphasis is on people. And so it's only been like Raymond H. Wheeler's work at the University of Kansas and the late Dr. Ivan Browning's work that has looked at climate and its relationship to economics that any of this is even known today, because it's not taught in university. And presently where we are in 1997 is at the trough of this sunspot cycle when things are moving up. And to give you an indication of how we're seeing increasing average number of earthquakes per decade of Richter magnitude or higher, the average number of tornadoes per year accelerating. This is the type of thing that is happening that affects economics. Of course, studies in Israel as well as in Russia, where they put during times of extreme solar earth change risk, put their key patients that are at the margin, basically psychologically unstable or physiologically unstable, either Faraday cages or in shielded rooms, because it so significantly affects the endocrine system and also the heart particularly. Anytime you have a low level of geomagnetic activity and you have a spike up in that activity, people who are on the margin in terms of heart attacks tend to have one. But this affects society at the whole. And from the doctors and the physicians and the counselors I talk to, it particularly affects women. Women tend to be more right brain oriented, electromagnetically they're not grounded. And that's not a sexist statement, that's a physiological reality. And so I think that's why one of the doctors uses Earth Manna for all of his work in the Candida Wellness Center out in Utah. Now, as planetary alignments affect stock markets, here's a relationship between the Standard & Poor's 500 on a monthly index and cycles formed by minor and major solar system instability events for calling highs and lows. No accident. So all the stuff and all the information you read about earth change is coming, and acceleration of whether it's El Nino or volcanic activity, earthquakes and the like, that affect your whole health and endocrine system. It's a time to be grounded. It's a time to get back to honest money. It's a time to have your health in alignment. Also, when you have a chaotic, heavy debt monetary system, it's likewise is threatened. Here's another one showing the same thing. S&P Cash 500 chart. A solar eclipse in 1987 nicely called that stock market top. Lunar eclipses and solar eclipses have significant effects on highs and lows in the stock market historically. So what's coming? We're moving into a time of shift. Already we're seeing signs that the bond market may be moving into distribution. The dollar has now hit its upside target where it either has to accelerate in a deflationary, depressionary sense, or it has to turn around. Let me show you the charts of these. This is the US dollar index on a monthly basis. As you can see, basically for the last 10 years, the dollar has oscillated on the dollar index between 100 and 80. 180, the last 10 years. It is now moving up through the 100 level. Well, this is means an overbought condition. It means everyone that's going to buy the dollar thinks it's going to go higher. If the dollar continues to move significantly higher from here, that means basically we're seeing an implosion of global debt, and the reserve currency of the world is the safest haven. That would be a deflationary, depressionary situation, particularly if that occurs with bond prices moving higher. And with the two bottoms here, and each of these lines is a monthly chart of bond prices. The whole point is bonds are now at the point, like the US dollar, where if they accelerate up, it'll suggest much lower interest rates and a stronger dollar, which would be a deflationary, depressionary situation. Alan Greenspan is on record as having followed my work, as is Paul Volcker, who's former chairman of the Federal Reserve. In fact, I've got a quote from Volcker in that handout piece. Before I forget it, if you can't follow all this information, my 800 number is 800-528-0559 for the tape. 800-528-0559. So the central banks of the world, the G7 that basically set the policy, is now concerned that we are moving into a global deflation, in which you do not want to be in debt, you want to be out of debt, you want to be in cash. And so the attempt to reinflate is taking place, all while we have this incredible currency crisis going on in Asia and in Europe, which basically everyone knows are going to be resolved in the next 6 to 12, 18 months, and thus lead to, again, pressure on the US dollar, which has basically carried the entire world economy through this recovery. So you ask to live in exciting times? Well, you are. By the way, one of the things that I learned this past week also is all these earth changes and frequency changes, what the doctors are finding primarily as a problem is that all these parasites and viruses and bacteria are mutating like crazy now. And so it's important to keep your immune system up so these little critters that are at the margin in terms of frequency and matter can basically be the only critters you want in your body are the ones that are healthy for you. Okay, now here's your Dow Jones Industrial Average. Here's your stock market. Anytime you have this wide a spread between the moving averages, which this line indicates, and the market starts to move up vertically with overbought conditions now for 3 straight years, this is a mania. This is a blow-off. In any market that I've followed, and I've tracked markets back to the 1800s, when you see a market going like this, you know you're approaching the end. You're getting very, very close. And I've led into this chart by explaining a lot of the technicals and fundamental factors in many different fields that are suggesting, whether it's cyclically or a currency crisis or any number of things, why, if you had a lot of money in stocks or you're complacent about stocks in an institutional sense, it's not a time to be that way. True enough, the biggest money is made the fastest in the blow-off of a move, when there's a mania, when there's panic buying and everyone is complacent. That's where we are now, which is also the time that you start to prepare for the trend change, and you start to take profits. You begin to become careful with your investments. It is a new era in a sense. It is a new era. Bob Beck and David Adair talked to you about the technological changes. What I talked to you about is that human nature hasn't changed, and how we basically function as a society presently is bureaucratic from the top down as opposed to covenant and contract with emphasis on the individual. And so that suggests we're going to move into a time of chaos that will probably be triggered by a downturn in the US dollar, a downturn in the bond market, and or a downturn in the stock market. And that shift could begin as early as this third and fourth quarter, and I would think for sure by next year, in 1998. Which means, for those of you who are interested in making some money, there may be some excellent opportunities to short the stock market. One of the best ways of doing that is with the RIDEX URSA fund. They have an 800 number, RIDEX URSA fund. You can also buy put options in the S&P indices. That's the way to short it. I think some of the bull markets we're going to see are the rising markets. The bull market, of course, is a rising market. We'll see in what I call the three golds. Protein gold, which is food. Black gold, which is energy. And real gold, which are precious metals. My two favorite gold stocks long-term, for those of you who are more security-oriented, are Franco-Nevada and Euro-Nevada. Symbol FN and EN. Pardon me. Franco-Nevada and Euro-Nevada. And in my newsletter, I also list the other more speculative gold stocks where they're a significant place. Well, another area that will do well, I think, will be rare coins. Some of the biggest money in this country and the world are presently viewing U.S. numismatic coins that are rare date, only few in issue, let's say of a certain date, let's say 6, whatever it may be, I'm going to hypothetically say a 1981 MS-65 dime. That's where big money is accumulating. They're placing their assets right now for accumulation. I want to show you some charts here because chaos is already affecting some of the metals markets. Palladium and platinum, a great deal of which is produced in the former Soviet Union and Russia, they're unable to meet their contracts. And so what we've seen is palladium and platinum prices soar through the roof. And just last week, the Impala mine in South Africa, which is also a big platinum producer, went on strike. And so the chaos that's coming out of that sector of the world, here's palladium, here's platinum, higher prices moving up, is an indication of chaos that's increasing. Well, so what I want you to notice is that climatic chaos is on the increase. 35 of 50 states this year have been declared weather disaster areas. Chaos is in the weather. We're seeing currency chaos in Asia and Europe. We're seeing precious metal production or industrial metal production chaos in South Africa and also in Russia. How long until it hits the Middle East, where Iran now has surface, air, and land-based missiles, effectively cruise missiles, and can close off the Straits of Hormuz, through which a third of the world's oil passes? What do you think when that happens, or we have an outbreak between the Palestinians and the Israelis in the Middle East, and oil prices soar? What's going to happen to the stock market? What's going to happen to gold? We're in a situation, and you heard the talk about the biological warfare and chemical warfare threat. All those are signs of approaching chaos. Now, in this environment, you want to buy low and sell high. Investments are organic. Investments are nothing more than a reflection of the expectations people have. And they're emotional because basically when you invest, you're investing in an environment of uncertainty having to do with what you think is going to happen in the future. So people become over-optimistic and they become excessively pessimistic. Well, where are people overly optimistic today? In ungrounded paper assets, bonds, stocks. Where are they overly pessimistic today? In gold, precious metals, agriculture, things of that nature. So it's no accident that we're now seeing gold basically in a price level where to a quarter to a third of the mines are going to have to shut down this next year. It's in the bottom 15% of its trading range as well, at a time when the Far East continues to buy it up. And that the mine supply globally is basically being consumed by the jewelry industry alone. And no one's interested. Does that sound like a repeat of human nature? It's possible that gold could break down to the 300 to 280 level. But the point is, we're down in extremely oversold conditions here, and the market is down to a price where big money is starting to buy and accumulate rare coins, precious metals, stocks, things of that nature. Here's gold on the weekly chart. For those of you who are more technically oriented, want to be very, very careful and safe, you'll wait till gold at least clears, once again, 340 to break the downtrend line. This is called the downtrend line here. Or wait till it breaks 380 to get through what's known as resistance or where selling would come in. But the next time gold clears 400 and 410, watch out upside. One other factor that's pressed gold down that is unique in this time in history. Anyone know what that is? Central bank selling. Central bank selling. This is a once-in-a-lifetime phenomenon. Once they've sold all they're going to sell, it's done. Markets bottom when there are no more sellers. Not when there are a bunch of buyers. Markets bottom when there are no more sellers. So we've got these unique once-in-a-lifetime factors impacting the financial investment markets, which has led to this aura and this attitude of complacency that has so captured the American public. You know in your own field of expertise, or you wouldn't be here, how lonely it gets talking to, quote, your friends, relatives, and the general American public. You know it's true everywhere in every single cutting edge, whether it's science or it's technology or it's health. It's also true in money and investments. Information is power. And when you're on the cutting edge and you're ahead of the crowd turn, that's where the money is made, that's where the advances are made, and also where you get the most arrows in your back, right? Well, that's where we are here. That's where we are in human history. This is the August gold contract. It's the latest price of gold. And I would like to see it at least close above 330 to confirm at least a minor bottom in this market. It normally takes 10 years, at least 10 years for a market to wash out. We've seen 12 years in rare coins. We've seen since 1980 in gold and precious metals. And as I mentioned, with all the funds short, with central banks selling, with the gold producers forward contracting, and selling their production forward short, everyone has pretty much sold all they're going to sell unless we move into a deflationary depression, in which case cash will be the thing to hold. And I gave you the two things to watch for if we move into a deflationary depression. What are those? U.S. dollar going up and bonds also going up. Okay, silver on the monthly chart looks better than gold does. Silver's been bottoming since 1990. Shows with a higher low here what is known as bullish divergence. While prices go down, this is a sign of accumulation. Silver is under accumulation, as platinum and palladium were before they moved up. If you want to be absolutely safe in silver, wait for it to clear $5 an ounce. Then you'll know for sure the bottom's in. Let's see. Now I want to show you something really interesting here, because this is the Goldman Sachs Cash Commodity Index. And on July 21 this year, just a few weeks ago, the Goldman Sachs Cash Commodity Index and the CRB Index made a spike, bottom, low, and commodities have been moving up since then. This suggests to me that the central banks have such a concern about these deflationary factors in the economy globally, they're already starting to try to reinflate. And one other thing about gold, long term it's a deflation hedge, not an inflation hedge, because it's bought during times of monetary chaos. If you monitor what's happened in Thailand and Malaysia and Singapore and Australia, New Zealand, and all of those current Indonesia recently, in addition to moving the US dollars, where else have investors moved into? Guess what? Precious metals. Here's a chart also of the CRB index that's widely followed here in this country. Notice that the July 21 low, spike low, at a time now the press started talking about the deflationary factors. By the time it's in the press, you know probably they're close to a trend change. And commodities are starting to move up. In short, things are chaotic. It appears to be an effort to try to move us back toward inflation in the global economy. Now, by way of historical perspective, I want to quickly get through these. Let that one go. Here's gold at historic lows in constant dollars. Question is, are you going to buy low or sell high? Here's silver prices in constant dollars. Here, since the 1960s particularly, in Johnson's gun and butter economy, we've seen gold long-term deviate from the value of the dollar. So what we're seeing with the dollar going higher now is a unique situation in history, where it's the world reserve currency and you have the rest of the world in currency chaos. And yet long-term, what's been going on with the dollar is a continued deterioration. How many of you here are currency speculators? How many of you here hold U.S. dollars? How many of you are currency speculators? All of us are. The truth is that the futures markets today, there are something like over 60 exchanges in the world today, where you leverage to 90 to 95% the value of the underlying commodity, means that the whole world is heavily indebted, heavily leveraged to the tune of $45 or so trillion. And so the tail, so to speak, is wagging the dog today. Everything today is literally like a Las Vegas casino in the world's monetary and economic situation. Inevitably, during a time of encroaching chaos in every other area, guess where the economic and financial system is moving? Toward chaos. Because where in the world do we see the emphasis upon individual responsibility, duty, empathy, and humility, leading to covenant and contract as the basis of society? That's not what exists today. Self-government is not the basis of society anywhere in the world today. It's all bureaucratic from the top down. So, you would expect that at the end of a 510-year civilization cycle, with things being 180 degrees out of phase, and that's a shift we go through between now and 2008 and 2012 to get us back to being grounded again. So this technology that Bob Beck and David Adair have talked about so beautifully this morning can be used by individuals who are not persecuted, rather than either eliminated from the marketplace or used for the elite, or worse yet, used to control. And notice all the discussion we had in this conference yesterday about mind control. Top down. Some of this starting to come together for you in terms of integration, how money ties into the whole system. Whoever has the money makes the rules. Whoever has the gold makes the rules. I mentioned the rare coin area. This area is really undervalued, numismatic rare coins. I suspect that we will see a major bull market there. Okay, I know I'm covering a lot of ground. I thought what I would do at conclusion is cover some things having to do with personal preservation of your wealth and just the basic principles. Can we do that now? Would that be helpful? All right. Okay. I don't know it all. My philosophy has always been, to be a student. And one of my working definitions of humility is the willingness to learn from anyone, anywhere, anytime about something about which you know nothing and grow, learn, and change from it. That's what abiding humility is in terms of my working definition. One of the most powerful factors on the face of the earth in terms of the debt money system, the most powerful factor, is compound interest. Compound interest. This comes from my good friend Richard Russell, who was one of my mentors. Now, it talks about investor A and investor B. Now, let's talk about this a second. Let's say investor A opens an IRA account at age 19, and for 8 years only he puts $2,000 into his IRA at an average growth rate of 10%. After 8 years, this fellow makes no more contributions and he's finished. Okay, 8 years, $2,000 apiece, okay? A year. You with me so far? Okay. Investor B, here we are if you want to follow with me in the reading. A second investor B makes no contributions till he's 27. This is the age when the first fellow finished his contribution. Then B continues faithfully to contribute $2,000 a year every year until he's 65. Same interest rate, theoretical, 10%. Look at the results. A, who made his contributions earlier and made only 8 contributions, ends up with more money than B because of interest compounding on interest. Question, if there's $20 trillion worth of debt in this economy and interest is compounding on interest, what's going to happen to it? Is it going to be paid off? Is it going to be defaulted on or inflated away? Exactly. Exactly. So what point is, the difference is in the two is that A had 8 more years of compound interest than B. Those 8 early years were worth more than all of B's 31 additional contributions. If you want to teach your kids something, teach them this. Save, rent if you need to, don't borrow long term. It's hard to get out from behind the 8 ball. The next rule, he says, is don't lose money. And the third rule of investing, and that means you cut your losses short. You know, investing is no different than the same principle in terms of dealing with relationships with people. You always have to take a risk. If you take a risk with people, the way I phrase it, You know, I buy them enough rope to either build a bridge or hang themselves. But I'll pay for the rope. I'll take the risk. I'll make the investment. And if they're going to build, if they're going to create a noose, I'm going to cut my losses short. If they're going to create a long-term friendship, the profits are going to ride. Same thing in investing. You put your money on the line. You take a risk. You make an investment. If it doesn't work, you cut your losses short. Maybe 5 to 10% of your investment. If it works, you let your profits run. Point is, you never sit on the ball. You never protect a lead in life. Security doesn't work in life because of that second law of thermodynamics. If you're coasting, you're going downhill. So you're always having to take a risk in life, always, whether it's with people or investments or any other area of life. Now, at the end of a 510-year civilization cycle, the countries, like in this case Western civilization, tend to be sitting on the lead or sitting on the ball. You've watched enough basketball and football games to know the teams that normally do that usually have to scramble later on unless you know, through God's grace, the time runs out. Point is, you must take risk in life consistently because time and entropy are always working against you. Spending habits of the wealthy. This comes from Thomas Stanley's study of 20 years of the wealthy. The wealthy aren't like J.R. Ewing on Dallas. That's not who the wealthy are, despite the politics of envy that are preached by the federal government and also the public school system. The typical millionaire, according to Stanley's research, one is a businessman who's lived in the same town his entire adult life. He's involved in the community. He knows who he is. He's got grounded. He has a sense of what's happening. 2, he owns a small factory or a chain of stores or some business. 3, he's married. He's got a covenant that's working and lives in a middle-class neighborhood next to people who are not nearly as wealthy. In other words, he has a saving mentality. 4, he's a compulsive saver and investor. Throughout history, regardless of race, culture, geographic location, those who save end up being the ones who win long term because of that compounding interest factor. Those who save and invest are the ones that win. Moreover, they know the greatest value available to man is always the low cost of good advice. The greatest value available to man is always the low cost of good advice, and that means humility. So these folks pay top dollar for something that will help them retain or build their wealth. They use better paid advisors, an accountant, an attorney, a financial advisor. They spend more on newsletters, on research and seminars of all kind. Let's see, what do I get to now? Harry Brown. Remember Harry Brown, How to Profit from Silver in the 1970s? He just wrote his last newsletter. We've had a legend in U.S. financial history now that is basically passing from the scenes. In his late July issue, he formulated his golden rules of financial safety. And he formulated 16 of them. I'm just going to run these through in honor to him. He said, first of all, remember your career provides your wealth. Your career provides your wealth. What you do for a living. Life equals time equals energy equals money. Whatever you have a passion for, where your motivation and aptitude are the crosshairs of your life, where those intersect, your motivation and aptitude in terms of your calling and talent, that's where you're going to make your money. Your career provides your wealth. Focus on what you do best. 2, don't assume you can replace your wealth, which means you want to focus on not losing money or preservation of capital so compound interest works for you. There are a lot of cockamamie schemes out there today. You want to make sure that you realize you can't necessarily replace your wealth. 3, don't use leverage or heavy debt. When you're in debt, what you're doing is you're mortgaging the past by borrowing against the future to invest in the present, but you're also assuming you can predict accurately what's going to happen in the future. And that's an environment of uncertainty. And so you want to be careful in terms of leverage or how much debt you use. And I prefer, if you're going to use debt at all, you use it in terms of your calling or your occupation as opposed to consumption, because consumption can increase your wealth or your knowledge. One of the best investments you'll ever make is your own health, your own talents, your own ability, and those of your families and friends, your children. 3 or 4, no one can predict the future. You know, I've spent a lot of time as a futurist, but every single day I do a market hotline, and I make calls on the market. I'm usually anywhere from 64 to 68% accurate on my trades every single day, with one exception in doing the hotline every market day since 1980. Only one day have I been totally right without being wrong. Had a loss in one of my trades. So no one can predict the future. 5, no one can move you in and out of investments consistently with precise and profitable timing. That's why you want to scale into things and scale out of things. And that's why you don't want to put all of your eggs into one basket, assuming you have a nest egg. 6, no trading or investment system will work as well in the future as it did in the past. It's like, men never change and women always do after they're married, Well, no trading system works as well in the future as it did in the past. 7, recognize the difference between investing and speculating. When you're speculating, what you're doing basically is like buying a gold mine. It may be a hole in the ground with a liar sitting on top of it. That's a speculation. When you're investing in such things as undervalued stocks, as not the case presently, or in gold bullion, or in your own business, or in terms of, let's say, treasury bills or T-notes of less than 5 years duration, those are the things that are considered investments. Speculation is maybe a startup company. So know the difference between speculation and investing. 8, don't let anyone make your decisions. Ultimately, it means you have to take responsibility for every area of your life. This group takes responsibility for its health. Also take responsibility financially. Even if you use money managers or investment advisors, you assume responsibility. That's that individual principle. All of us are individuals. All of us are, in that sense, masculine. We have to covenant and contract. That's how we create the whole. 9, don't do anything you don't understand. If you're going to buy on Charlie's advice, you've got to sell on Charlie's advice. Otherwise, do not do anything you do not understand. It's a mistake. 10, keep some assets outside the country in which you live. I can't think of a good reason to do that. Can you? I mean, I met with a Swiss ambassador in Houston a couple of years ago, and there were about 12 of us, a professor of international law at the University of Houston, a couple of top money managers there. And the increase in international business had been like 400% since Clinton had taken office, because of everything from lawsuits to seizures to divorce to regulations to everything imaginable, estate taxes that's taking place in this country. It's considered a high-risk environment for those with assets because the politics of envy are so inculcated in the culture. 11, be aware of tax avoidance schemes. This has nothing to do with justice. The IRS and the tax system has nothing to do with fair play or justice. So you're not going to get a fair shake, so you've got to be careful. And you better use the best accountants and the best CPAs and have a legitimate basis if you're going to avoid something that has a tax write-off, because anymore it's being carefully looked at. Thank God the IRS computers aren't what they should be. 11, don't depend on any one investment or institution for your safety. In other words, not all your eggs in one basket. Diversify. That's 12, rather. 13, create a balanced portfolio for protection. In other words, I may have 10 trades in the market or spread out. I want to look for maybe 3 of them to do well, really well, in terms of long-term investing. This is not short-term trading. I'm talking about investing here. And I'm going to cut the losses short on the others. If that takes place, I know I'll come out ahead, because the most successful, for example, commodity future speculators only make money on about 3 of their 10 trades. Has to do with letting profits ride, cutting losses short. Friends come and go, but enemies accumulate. Same principle. Same principle. You have a lot of losers and a few winners. Okay. 14, speculate with only with money you can afford to lose. We talked about the difference between speculation and also investing. 15, enjoy yourself with a budget for pleasure. For me, I have a trust fund set up that the first 10% goes in for charitable contributions. Second 10% goes into my savings. And then I have a budget that I use that I can enjoy some of the things or enrich other people's life. Because I really don't think you're healthy or joyful in life until you cross that bridge where it really does feel better to give than it does to get. When it really starts to feel better to help someone else, we're talking about heart here. And money's a matter of the heart, because all of us keep our pocketbooks so close to the heart because it's tied to our survival in a culture like this, where everything's interrelated. And I'm convinced that until it feels better internally, in terms of your soul and your spirit and your heart, to give than it does to get, you never really cross that bridge from darkness to light or from death to life and from sickness to wealth. And that means also, allow yourself to have a good time. Don't be so hard on yourself. If you're hard on yourself, you're going to be hard on other people. And the final factor, 16, when you're in doubt about a course of action, it is always better to err on the side of safety. The way I put that, when in doubt, stay out. If it's a relationship, if it's a business deal, if it's an investment, if you find your breath starting to shorten, your stomach starts to churn, you're a little bit uneasy, then, most decisions don't have to be made on the spur of the moment. Give yourself time for the evidence to accumulate. Most decisions are best made as you wait over time patiently for the evidence to come to you, and then the decision becomes obvious and you can make a good decision. And if that's not there, when in doubt, stay out. Thank you.
Thanks a lot, R.E. Thank you very much. Now, have you got all that straight?